Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to dive into Twitter, see what people are sharing on social media, what they're talking about, and then I'll sprinkle in my financial opinions as we go. It's probably going to be related to three different topics: wealth building, financial topics, and/or commodities. So let's dive in here. Let's see what people are talking about, and I can give you my opinion. If you want to follow me, it's at Finance. And if you want to join our community, it's finding-value.com. That's where I go over individual companies, individual stocks, and also where I do question and answer sessions to answer your guys' questions. Use discount in the coupon code if you'd like a discount. So Sahara posted, says poised with double bull plots within the handle of the cup, this bull flag in inverse head and shoulders on silver. And again, it is, I think it's silver in US dollar terms. There's the big, huge cup from the 1970s lead in, and then we're putting on the handle, and hopefully we get a potential breakout. Now, what would cause that breakout? In my opinion, it's probably going to be related to money printing. We're going to do something, and I don't know what it is. Maybe it's bank liquidity. Maybe it's something that we don't know that is a problem in the system yet. And it's either going to be uncontrolled spending or liquidity coming into the market to save something. I don't know what. And it sends this to the moon. It's going to send a lot of other precious metals too, like gold, silver, platinum, probably palladium as well, to a land far, far much higher away than where we are today. And you can see the inverted head and shoulders there that he's highlighted in this right hand area. So the inverted head and shoulders. Is this thing going to bust? I'm in it. I'm waiting for it. I'm just kind of patiently sitting on the sidelines. Well, not on the sidelines. I'm patiently waiting in physical metals, just waiting. I've got plenty in it for it to make a difference in my life. So if we rip, perfect. One was betting on $100 oil. The other was betting on $10 oil. So we've got Berkshire versus ARC Innovation. And this is the total returns over the last 3 years for both of those funds. Buffett was betting on $100 oil. Kathy Wood was betting on oil never going above like $20 or $30 again. And I was completely dumbfounded by her reasoning behind never going above 20 or 30. She's like, we're going to EVs, everyone's going to buy an EV, and then like basically oil is just going to shift in the fastest shift of anything ever to electric vehicles, and basically obsoleting oil is what her opinion was in 2020. And I took the opposite. I was like, there's no way in chance, like less than 0.000001 would her opinion have been right in my mind. So I took the opposite bet, and we are still here grinding out demand that's it has never been higher before. We've got all-time highs in demand worldwide for oil, and she's taken her bets on this ARC Innovation. A lot of speculative companies in the tech sector. Obviously, it's not panning out as expected, but that happens too. I'm not saying that I know everything or anything like that. There's going to be times where things just don't pan out in your favor for a period of time until it swings back in favor. And that can be stuff that is incredibly cheap. She's going after stuff that is incredibly expensive. And I don't play that game. I just don't play that game. But Warren, yeah, Warren's done a pretty good job over the past 3 years. I don't even know if he's beaten the S&P 500 to be honest, but those are those two. Canadian dollar CAD versus the US dollar USD. When the Canadian dollar breaks out against the American greenback, gold and silver soar. We're right on the verge of seeing that happen. Now, here's the thing that I've got. Here's the correlation. This is Canadian dollar outperforming USD, and you can see gold and silver really ripped it during that time frame. Basically, what this is charting is a market condition. And what he's saying is the market conditions changing where this will go higher. In that market condition, I am going to bet that the dollar is going to fall and interest rates will go down. Are we in that market condition? And I'm going to tell you, I don't know. The short term, incredibly difficult to figure out where rates are going to go in terms of interest rates. The 10-year, the 30-year, or the 2-year, any of them. I don't think Powell has told us exactly how clear he is for this year, if he's going to hold and then potentially pull back. He may not even know himself what exactly they're going to do. So the market, while it may look like it wants to go and break to the upside, and it may look like silver is ready to rip to the upside, and the big cup and handle that we just looked at, it looks like it wants to go. And generally, when that occurs, we see the Canadian dollar outperform the USD, and we see rates generally drop. I just don't know if rates are going to drop, and that's where, are we going to break the historical, like, 40-year, not going all the way back into the 70s, but the 40-year movements with rates and gold and silver? That I don't know, but we'll continue to monitor it. We'll continue to watch it. There's no reason for me not to be in precious metals with the charts the way they look. On the other hand, too, a lot of things in commodity related went up from '02 all the way till 2008 in that period. So during that period where the Canadian dollar outperformed, a lot of different commodities outperformed. And you can even look at some of the indexes up in Canada, like the TSX Composite Index. It looks really good to break to the upside. So commodities just in general look very good to break to the upside. Precious metals do, and maybe they all run together. Maybe we'll see something similar to '02. Residential construction payrolls make a news cycle high, and usually when construction is going up, we see a pretty robust economy. When I say robust economy, that does not mean the stock market. The economy, when it gets really robust and starts to heat up, generally oil goes up, a lot of commodities go up, the housing market goes up, and stocks could go sideways to lower in an increasing inflationary environment with increasing interest rates. And generally construction payrolls go up during that type of environment, which we're seeing. The 10-year Treasury yield jumped 16 basis points to 4.03% today. Its biggest one-day jump since October 26, 2022. And keep in mind, yields are the bedrock of the pricing of assets in the system. And we just had a massive move to the upside. And I'm surprised at how the S&P 500 and NASDAQ took that big move. They both went up. Oil went down, and generally oil is pretty correlated to yields, which is surprising. Coming down, CEO, technician says, Goring erosion swag on gold and silver. Real interest rates continue to inch higher, and Westerners continue to sell gold. All this selling is being met by central bank purchasing. Western investors stop selling gold and begin accumulating. Their buying will quickly bump up against central bank demand. The next leg of the gold bull market is likely to begin at that moment. We are getting closer and closer, and we continue to recommend investors maintain significant precious metals exposure. Physical gold has significantly outperformed precious metals equities, as Western investors have been selling both physical and equities. Gold stocks, GDX, are down almost 30% from the 2020 peaks. Silver stocks, SIL, have pulled back even more. They have now pulled back 40% and both represent excellent value. So their opinion is to stay long in precious metals. And that would be my opinion, my opinion too. But we'll see what market conditions come. Hopefully it comes for them to go higher. The 10-year yield back over 4%. Look at the move. It's staggering. Look at that move, guys. And 4%, I mean, it was up over 4% in a single day as well. Not just to 4%, but it was up over 4%. Big move. Copper shortages after 2025, says Willem. So let's take a look here. It says annual copper consumption has grown at 2.5% on average over the last 40 years. The trend economic growth would imply a growth rate of 2.1%. His estimates, or our estimates, which is RBC Capital, for a 2.7% growth rate, including in the incremental copper demand from electric vehicles and electrification. So what happens is you start to run a deficit like we're going to get in 2024. We're going to slowly eat through inventories. And then that's where the shortage could occur, is when the inventories run dry. That's when price really starts to take off. And I'm sure everyone in uranium knows what that looks like. It's going to happen in copper here very soon. And all you have to do is position and wait. I know that sounds easy, but for most people, it's more difficult than what they think. Copper, a forced shutdown of 10 billion mine signals to companies. Invest in rule of law countries only. The sixth largest copper producer in the world has learned that the hard way. Cobra Panama mine, which produced 350,000 tons of copper in 2022, is now closed. So that's the closure of Panama copper mine threatens the transition, electricity transition. Here's another one. It says the bigger question here is how did Sky News Arabia have better intel than US MSN? So there's a major US strike in the Middle East could begin within hours, Sky News Arabia. Sky News Arabia is reporting Friday morning that major US strikes against Iran-aligned targets may begin within hours, while NBC is once again reporting that Biden's counterattack plan in response to the killing of 3 Americans last weekend is expected to unfold over days and possibly even weeks. Iran's president issued a warning in response Friday saying Tehran is ready to respond strongly to anyone trying to bully Iran. We will not start any war, but if anyone wants to bully us, they will receive a strong response. So here's a weird thing. What's up with oil being down the past 3 days? And what's up with these targeted kind of attacks in the Middle East? Are those two correlated? I kind of think they are. And I don't think they want people jumping on the oil train or the gold train for that matter. They're both down, which is weird because usually when you get rates to come back, oil or gold fires off. When rates go up, oil goes up and gold goes down. Usually. This will be an important weekend for natural gas. The longer-term models show a pattern shift around February 15th to the 19th toward above average, and that is gas-weighted degree days. The near-term GFS will begin to erode on this period over the weekend. If prices are to rally, these models also need to show a cool down in terms of temperature. And when we're looking at this, guys, we've got a decline in those gas-weighted degree days, and you can see it's above average looking at this bottom here. So for us to get through and to increase prices in natural gas, we really need a cooler weather. We need to really start to basically draw down inventories. And right now, we are at very low gas prices, and it's going to weigh heavily on gas producers, unfortunately. The weather is not cooperating for high gas prices. But the layoffs and the terrible economy, this is one of the healthiest jobs and wage situations we've ever seen. So January jobs report, U.S. economy adds 353,000 jobs, blowing past Wall Street expectations. That's what we're seeing. The market is strong in the economy. GDX, if you can wait and not get tired of waiting, we are squeezing on up in GDX. We haven't broken out yet, but if you can wait, hopefully we can break and move on to the upside. The case for silver, long-term value investor. So have a great weekend, uranium friends. What does he got here? This is a Livermore accumulation cylinder. 1, 2, 3, 4, 5, 6, 7. And I've posted this quite a bit. And we're breaking that cylinder to the upside, and we're probably going to run. Probably going to have a big run. So everything looks really good. This is the Sprott Physical Uranium Trust that we're charting here with this accumulation cylinder, and it looks really good. to continue higher. Meta is essentially an advertising company. It's virtually all of their revenue. Google and Meta combined are nearly half of all global ad spending. Where is the growth going to come from if they're already half of all global ad spending? Good question, and I don't know where. Do we really want public school teachers teaching personal finance? A lot of them took out a $100,000 student loan for a job that pays $45,000. Just an observation. And I know a couple of teachers that did exactly that. They went to private schools to come out and get teaching jobs at very low wages. Some people will say, well, teachers need to get paid more money. I don't know. I don't know. I think it really highly depends on a lot of things. That's what I'll say. My mom's she was a teacher. She's retired, but she was a teacher in a very good school at a very good area. I know it's confusing, but the stock market is now basically only a proxy for total liquidity instead of the business cycle. Our nanny state government increases liquidity when things look tough because pain is now illegal. But when no one is in pain, they reduce liquidity. So that's true, though. The stock market goes up when liquidity is added, and when liquidity is taken away, the stock market goes down. That's exactly the state we're in. And liquidity and debt are also highly tied together. And I think they're very afraid of a debt crisis, which means that liquidity, I think, will continue to flow irrespective of anything else. Here's the current situation, and I agree. Stocks are trading like the Fed already cut rates. Bonds are trading like rate cuts aren't happening. Gold is trading like we're on track for landing. Oil prices are trading like we're entering a recession. Housing markets are trading like nothing is happening. Nothing adds up here. And I agree. There's a lot of things that don't match up in the markets. You've got certain assets behaving differently than others with the underlying yields going in a certain direction. Very interesting times. The capitalization of 7 companies account for 13% of the GDP of the entire planet. Something isn't right here, people. Yeah, it's called a bubble. We're in a massive bubble. Coming down, the capitalization of Mag 7 is around 13 trillion. To put that into perspective, how insane that number is. It's a fourth of the entire US stock market. It's 5 to 6 times the US government fiscal deficit of 2023. It's 38% of US debt, and it's 6 times the 2023 increase in US debt. These 7 stocks are mind-bogglingly huge. Agreed. If you're selling uranium at this time, I have failed you. Please unfollow for NT Principal Capital. I think that's funny. Thank God it's Friday. Now it's time for some bank failures and fresh monetary pow from Powell and Yellen. So what he's basically saying is that we're going to see a flood of liquidity, fresh monetary stimulus, so to speak, because of potential bank failures. Is that going to come? I don't know. We'll be ready for it. Strong payroll means the labor market is still tight. We aren't in recession, and oil demand is strong. That's what he said 13 hours ago, and then the oil price fell. Demand is strong. We're hitting at all-time highs, but something in the market does not want oil to go up. I'll just say that. We are witnessing history today. So Meta has added $205 billion in market cap today, making it the biggest single-day gain in history. This breaks Apple's previous record of $191 billion gain on November of 2022. Just a couple of years ago, Meta suffered the single biggest market value loss in a day in the stock market history. Meta will hold the record for the biggest daily gain and loss in a single day. It's truly incredible. Notice all these dates here, guys. They're all in 2022, 2023, 2020. Everything's been recent in these gigantic, biggest single day market cap gains. You know what that sounds like? Sounds like and smells like and walks like a potential bubble. Everybody wants into Meta. Oil getting sold like it's worthless. That's what the current thought paradigm is. I've done 14x on my Paladin stock in one account and still haven't trimmed. I probably should though. People talking about potentially trimming uranium. I don't know. I haven't trimmed any of my holdings that I purchased in 2020 and after, but I'm just going to wait and see. And inventory is not building, so I don't see how uranium will necessarily go down a lot if there's no inventory of it. We bought puts on QQQ and SPY today. The reason I did that is because we believe I can sell them later to someone else at a much higher price. Well, yeah, obviously. But new all-time high for QQQ and a new all-time high for S&P 500. And that's what we've got for today, guys. So that's where I'm going to end it. Give me a thumb up for the content. Subscribe to the channel if you haven't, and subscribe to the website if you'd like. We're running a question and answer session right now, in fact. It started at 7 a.m. Mountain Time. I release these things at 7 a.m. So if you want to jump on the call, this is just a reminder that it's going right now. Or if you want to sign up, use the word discount in the coupon code. You can jump on the call and ask me whatever questions you guys got. All right, guys, that's all I've got for today. We'll catch you later. This is Finding Value.